All right then, good afternoon everyone as we head into another week of trading on Monday the 19th of February. We'll have a look across markets, have a flick across the calendar, see what's going on over the course of the week. As you can see, it is a pretty quiet week on the economic calendar front. Really, I mean, you got the minutes on Wednesday. I'm not sure they really give us too much information. They might give us, further clues on when the Fed actually expect to start interest rate hikes. There is no date set out. Multiple members of the committee and multiple speakers from the different banks around the country failed to give us an answer on when we may expect to see those rate hikes, as they probably don't, or rate cuts should I say. They probably don't even know themselves, though, to be honest. Incoming economic data will have to suggest that, but as long as inflation remains sticky as it did last week, and economic data remains strong as it has done over the course of this year and back end of last year, really no need to cut interest rates, and it doesn't put much downside pressure on stocks. You can see the way the last week went. I mean, have a look at your S&P, the Dow Jones, the Nasdaq, the Russell. The ticker on the Russell's kind of broke at the minute. I don't know why, but anyway, it's not the more important of the stock index. You can see big downside post CPI. I rebounded and then reversed all those losses across all the major stock indexes, and again, just another opportunity to buy a dip. And you'd have to imagine the same thing continues as we go on forward. I mean, we've a little bit of negative economic data back end of last week, but again, one day the print doesn't really change too much now, does it? So we'll have to keep an eye. Have to keep an eye on markets. There's no fresh high impact economic data for us to go off on the economic calendar. We'll obviously have numerous speeches throughout the course of the week, come across that bridge when it comes to it in relation to them. But you're gonna have to imagine stocks continue higher, aren't you? I still do think there's probably more left in the dollar. I mean, the move has stalled somewhat against the dollar block, your Aussie, Kiwi, Euro, and Sterling. And have a look at dollar Swiss, dollar CAD, dollar yen. They're all still trending higher. I mean, the higher highs and higher lows with your dollar CAD. You can see longer term, kind of over the course of January and month of February so far, has been bullish, certainly across dollar CAD. Which brings us on to kind of one of the main focus of attention this week, which is Canadian CPI tomorrow. Now, oil price is kind of trending higher, as you can see, over the last couple of weeks. Does kind of put a bit of difficulty with that inflation print, with the Bank of Canada suggesting that they are done interest rate hikes completely. That's just basically what they've communicated to markets, should I say. If that comes in lower than anticipated, as Canadian dollar weakness, oil strengthening does put a bit of a dampener on that sort of trade. So, but we'll keep an eye on it as we get around to Tuesday tomorrow. Maybe it's worth a punt when you get around to it. 1:30 tomorrow. But with the lack of economic data on the calendar, you kind of got to go, with recent trends. I mean, every week that goes past, you're seemingly getting further and further away from an interest rate cut from the Fed. That is a situation that the dollar strengthens, and usually stock indexes weaken. But if there's less and less of a need to cut interest rates because economic data remains positive, markets have taken that, or stock markets have taken that as a positive, due to the fact that when the central bank do go and cut interest rates, it will not be because of an economic downturn. Probably a slight economic downturn, but not a full-blown recession with mass unemployment or any of that. They will likely cut interest rates before we get to that point. So as long as economic data remains okay, which it has done, obviously we're getting on this week, you have to imagine stocks probably end the week higher. US dollar probably ends the week higher as well. That brings us on to bond yields, and they continue their moves higher. It's not a sequence of events that you see too often in financial markets, when the currency, the stock index, and the bond yield of that respective nation all trend higher at the same time. Bit of a difficult one to work out from a standard economics point of view. That's where experience of markets comes in. Apart from that, I've not got really too much to say. Back end of the week, we got some European data. We got some German manufacturing PMI, again supposed to be below 50, but a bit of an increase from the previous month. And business climate figures starting to pick up again. Maybe that puts a bit of causes a bit of upside in the euro. But ultimately, I do think the European Central Bank will be one of the first, if not the first, to cut interest rates as and when we get to that point in time. So I think you got to work with recent trends. I think you still got to look for dollars higher, stocks higher. It's probably that is where I will focus my attention over the course of this week. Oil stalled a little bit last week, as you can see, a little bit choppy, but ultimately I still do think that's a bit bullish. We are at a resistance level now. If we can get above 79, kind of clears the path for further upside. I mean, we do have that round number of 80. In reality, you probably wanted above 80 before feeling kind of properly confident on longs, but we'll cross that bridge if it comes to it a little bit later on in the week. But I think US related assets have to remain on focus, even though there's no economic data for them really, apart from the minutes on Wednesday. Ultimately, there's not a lot of economic data for anything. So either this week it can be good for technical trading, good for your cross asset correlations, or it can end up a pretty choppy week. So I wouldn't go too mad pumping trades left, right, and centre. Let's see how it plays out over the course of this week, but have to back recent trends to prevail, I think.